Ladies and gentlemen, good day and welcome to the WABCO India Limited Q3FY22 post-results conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Annamalai Jayaraj from Batlivala & Karani Securities India Private Limited. Thank you and over to you, sir.
Thank you, Janice. Good afternoon. Thanks for joining us today and welcome to WABCO India's call to brief on the quarterly earnings. Today, the third quarter earnings for FY2021-2022 will be presented by the management team of WABCO India Limited. Our host today from WABCO India Limited will be Mr. P. Kaniyappan, Managing Director, Mr. R. S. Rajagopal Sastry, CFO, as well as Mr. M. Lakshmi, Company Secretary. Certain forward-looking statements that we'll make today are based on management's good faith, expectations, and beliefs concerning future developments. As you know, actual results may differ materially from this expectation as a result of many factors. WABCO India's results for the quarter ending December 31, 2021 were published on January 27, 2022 and is available on the website www.izf.com under the Investor Relations section. We hope that you have had an opportunity to go through that. A transcript of this call will also be made available on the website www.izf.com under the Investor Relations section. I'll now hand over the call to Mr. P. Kaniyappan, who will provide you with the further insights onto the results. Over to you, sir.
Thank you, Mr. Jayaraj. I warmly welcome you all to WABCO India Limited third quarter results for financial year 2021-2022. Let me begin with the business update. First, the industry and economic update. I would like to start with the macroeconomic aspects relevant to our industry, the GDP growth. As you will be aware, there are many estimates of India's GDP growth. The consensus appears to be a growth of 9.5% for the financial year 2021-22. Additionally, there are positive trends in the index of industrial production, particularly driven by mining and a moderate increase in highway construction. Freight rates showed a steady average increase of close to 7% every month during the quarter, where diesel prices have remained flat. The improved uptake in bank credit is also at the highest level seen over the last 2 years, which provides room for optimism. This should augur well for our industry in terms of both demand and sales. Despite the challenges posed by the continued semiconductor shortages, increasing material and logistic costs, we will continue to protect our customers and business and strive to deliver value to our stakeholders. Our customers produced almost 66,000 air brake vehicles in this quarter, a growth of 14.2%. This is the corresponding quarter of the previous financial year. The base effect of the earlier quarters is now wearing off. This, combined with our own outperformance, has generated sales growth in OE, which I will cover in more detail in the financial section. We have been working consistently to increase our content per vehicle, and in the quarter under review, we were able to extend our telematics business further with a leading OEM for their HDD platform, in addition to the light and medium duty segment on which we were already supplying. We were also able to increase our share of business to OEM products, including the lift axle control system, and increase the penetration of our hill start aid feature with more and more vehicle platforms being equipped with this technology. In the aftermarket segment, we were able to provide retrofitment solutions for advanced connectivity solutions like Trailer Pulse. Trailer Pulse is an excellent solution that makes the most of enhanced connectivity functionality. It monitors the health of the trailer and transmits crucial information through different multifunctional and dynamic web-based platforms, thereby allowing fleet operators to make informed decisions about their trailers more quickly. Designed to capture maximum data on trailers with limited electronics, Trailer Pulse is a robust trailer telematics solution that supplies real-time location and rich electronic braking system data. We were also successful in expanding our aftermarket distribution network with the appointment of 13 new wholesale distributors with over 100 additional branches, improving our pan-India reach. Taking the digital initiatives for the aftermarket a step further, we also launched a dealer and mechanic reward program on the customer center, which is our own e-commerce platform. The export growth is muted in the quarter due to the non-availability of semiconductor components. We commenced the deliveries of compressors to DAF and the levers for air disc brakes from our Mahindra WABCO plant. We have secured additional businesses for double diaphragm spring brake actuator and automatic slack adjusters from the North American market. The greatest single impact on the industry and our company has been the commodity price inflation. Between the same quarter of the previous year and the current quarter, aluminum became 72% more expensive, hot rolled steel by 46%, cold rolled steel by 44%, cast iron by 70%, and copper by 42%. This had a significant impact on our material costs, although we have worked very closely with our customers and secured partially compensation to help offset this impact partially. We are taking multiple initiatives which include seeking further compensation from customers and also driving productivity initiatives in the supply chain and factories, localization of the imported components, and also redesigning the products to cost of some of the products where there are opportunities. The company has significant export content, and our standard exporting currency is euros. The quarter began with a strong euro of INR 88.34 per euro on the 1st of July, and then to 84.65 on 31st of December 2021. This had an impact on our results because of the mark-to-market of forex denominated assets and liabilities. The global commercial vehicle market continues to feel the impact of semiconductor shortages. We are working with our global supply chains to move carefully with agility to protect the interest of our customers here in India. Now I am moving to another topic: integration and expansion of ZF business in India. ZF announced the successful launch of its new commercial vehicle solutions CVS division with effect from 1st of January 2022. The new division combines ZF's expertise in the commercial vehicle industry and will significantly advance the solution for safe, sustainable, and digitized transportation. The new division unites ZF's former commercial vehicle technology and commercial vehicle control systems division, the latter of which was formed from ZF's May 2020 acquisition of WABCO. As CVS India, our vision is to help shape the future of commercial transportation systems in India. By leveraging synergies across the ZF group, we are uniquely positioned to offer the next generation of solutions and services for commercial vehicles and fleets in India and worldwide. Our support will play a key role in making them more efficient, safer, connected, intelligent, and automated. Under the umbrella of ZF's strategic vision for next generation mobility, we will leverage our capability to innovate, integrate, and advance CV vehicle control systems and set the pace to address the challenges of the commercial transportation industry in India. By mobilizing commercial vehicle intelligence, we will powerfully contribute to the next generation mobility corporate strategy. As a logical step, the company sought the approval of shareholders to change its name to ZF Commercial Vehicle Control Systems India Limited. Shareholders have consented the majority voting in favor, and we have initiated the follow-up action, which includes statutory and other brand promotion exercises to further strengthen the ZF brand in India. Our expansion project at Oragadam is progressing well, and currently we are in the preparatory phase for our plans and obtaining the required approvals. In line with our plan, construction is expected to commence in the latter half of March 2022. We will invest about 150 crores within the next 2 years, including plant and machinery. Additionally, the company successfully incorporated its own subsidiary named ZF CV Control Systems Manufacturing India Private Limited. This company will focus on manufacturing ZF products, plans for future India market introduction. The company also filed an application to be considered as a recipient for the production-linked incentive for the manufacture and sale of automobile and auto component industry products. We await the outcome of this application. Now I am moving on to the CSR outreach, corporate social responsibility outreach. As the COVID-19 pandemic is ongoing, we are continuing to offer our support during these critical times to help improve the capacities of community hospitals to tackle the pandemic. At WABCO India, CSR is viewed as a powerful opportunity to help create a positive impact for the future by working together with the communities, governments, and local bodies to deliver qualitative social improvement. The WABCO Foundation, a not-for-profit organization, has been set up to implement our CSR initiatives. During the third quarter of the financial year 2021-22, we supported the Assam State Transport Corporation with some 45 sanitizer machines. As previously communicated, we supported the government of Tamil Nadu's free vaccination initiative. I'm happy to share with you that of the 8,000 doses we have committed, we have now reached the halfway mark. Additionally, we conducted a blood donation camp at our Jamshedpur site, and 82 of our employees came forward to take part in this important camp. Continuing to make progress on our road safety initiative, in this quarter we conducted five road safety interventions. A total of approximately 320 vehicles were checked, and health checkups were done for 280 drivers, and they were supported through the CSR Foundation. Almost all company employees have been vaccinated with the first dose. The company population with the second dose is steadily increasing and was at 81% as at December 2021. In line with the relaxation in restrictions at various locations and the evolution of the demand, the company is progressively scaling up production as it evolves. This includes increasing office-based working, following strict social distancing norms and protocols, and with employees safely remaining a top priority. Awards and recognition. WABCO India Limited won the Best Supplier Award for the category of technology innovation from Volvo Eicher Commercial Vehicles. Our Mahindra World City plant has been chosen for Export Excellence Award for our export performances in financial year 2016-17, second position, and financial year 2017-18, first position. Our employees continue to demonstrate high levels of engagement and participated in various external total employee involvement competition, winning numerous awards across several categories in the third quarter of the fiscal. I'm happy to share that in this quarter, our teams won a total of 12 awards, both at national and regional level, in the various competitions organized by the CAI, ACMA, and QCFI, Quality Control Forum of India, Auto Component Manufacturing Association, and Confederation of Indian Industry. And now, moving on to our financial performance for the quarter. For your is of reference. The results were made public at 6 p.m. on 27th of January. I hope you have had a chance to go through them. Aided by an increase in vehicle production of 16% and our own market outperformance of 11%, our sales to OEMs is 275.9 crores, which is 26% better than the previous year. The overall strength in demand ensured that our aftermarket sales too jumped by 19.2% to 87.4 crores this quarter. Exports was a strong performer last year, helping us manage a very difficult time, and it remains almost flat this quarter at 229.3 crores. Our engineering and other services continue to provide very strong value to our customers in the group. The growth in service income is very healthy, 29.6%. Well, I have a lot of good news which I shared with you on the top line. I should say the current period is very challenging from a profitability perspective. Overall, we have achieved a profit before tax of 43.2 crores, which is 7.3% of the product sales. Our EBITDA for the quarter is 11.4%. We continue to carefully review the environment and our performance to consider further opportunities for actions to mitigate the commodity inflation gain traction. This is important as we also see softening of the commodity prices going forward. Thank you. We are now open to take your questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, I'm not sure if you mentioned this. I joined the call a bit late, so I'm sorry if I'm making the repeat. If you could just highlight the OEM, domestic aftermarket, and export business for me, please.
Yeah. See, actually, the our performance in the OEM has been, of course, driven by two factors. The vehicle growth itself has grown versus the previous year quarter, 14.2%, and we did outperformance of about 11%. So our growth is around 26% in the OE. In the aftermarket, we grew 19.2% again this quarter versus the previous year same quarter. Export more or less flat because our growth in the previous year itself is very good in the export. So we had certain challenges to, even though the orders are there, we were not able to deliver because we needed certain semiconductor parts to be fitted on export in few of the parts, plus also some certain sensors. These items are to be imported, fitted in our in the product and then dispatched. Because of the challenges of getting that semiconductor components, so our aftermarket sales, our export sales, it was somewhat muted. Plus, also globally, there are a lot of challenges due to semiconductor in our, our other sites which are actually importing the products from us. Their growth has also been muted. So export is more or less flat at 229 crores.
Got it, sir. Sir, just wanted to get a sense on the domestic piece. You said that that piece was about had grown by 26%, and you said that your market with air brake system grew by about 14%. Sir, would it be fair to make a comparison with the overall MNHCV? If we just compare the 16-tonner and above goods carriers and above vehicle segment in order to gauge your performance, how should we sort of gauge that?
See, we have a comparison of largely air brake vehicles. Air brake is essentially above 16 all are air brake, but even there are vehicles above 7 tons also. Quite a number of vehicles are in the air brake segment. As I said, the industry in that segment has been growing at, it has grown in that quarter at about 14.2%. And we have outgrown the market by about 11%. So this is the same. So largely our play is in the above 16 ton, but we also have a certain amount of certain sales we make above 7 ton as well. So the in the sector the growth is largely driven by the e-commerce sector, tippers. Most recently there is a traction on the haulage also. So the industry, of course, if you see compared to the previous year, there is a growth of this 14.2%. But within the quarter, it started well in October, but then there was slowly started moderating November and December. Again, because probably the new year, new model year, it's all the scrappage policy that is going to come. 15 years people have to scrap the vehicles. So there was some muted growth within the quarter itself from the beginning to end, October to December. But we see, but we see in January onwards, we see a little more positive news further.
Right. Sir, I mean, I was just looking at the 16 ton and above goods carrier vehicle production. It comes to around 45,000, but I'll take that clarification offline. So my next question was on margin. If you could just probably, you said that the raw material cost is the one which got because of which we got impacted. Just wanted to get a sense. Have we started passing that on to customers now? Because we are way off our normal gross margins at this point in time. That's point number one on margins. The second point is the overheads. That is other expenses this quarter have been pretty high at about 89 crores, which is almost a 46% YOY growth. So what has contributed to that? These are my two questions on margins, sir.
Yeah. To the first question, we have been regularly interacting with customers to get that prices compensated. Almost we have got almost 4 times in the year. Every quarter the logic we work with them is that we will absorb for a quarter, and end of the quarter they compensate. So in the OE, but the challenge was the maximum increase happened in October December quarter. Main in the aluminum. Aluminum very steeply increased in that quarter. So some of that will get compensated in this year. So typically I would say, to give a number to you, in the OE business you got about 70% compensated. Actually we are working with them to get the rest as well. On the aftermarket, on the other hand, we have affected because we made 2 increases, one in March, other one in July. But still, as of now, we have got about 46% of the inflation. Pass on. The rest we would like to do it in the coming quarter. There is a time lag, but in principle, some amount of indexing, even though we don't get 100%, but then a certain amount of indexation we have actually, during the course of the year, we work with customers and make sure that it's accepted. So that's the on the compensation. On the overheads, I would request our CFO to give some light on that.
On the other expenses, straight away we spoke about the foreign exchange. So foreign exchange loss definitely was one of the elements. And because of the increase in, some amount of increase in volume, the volume also explains the additional variable expenses which we have incurred. And a few other topics which we had was, CSR was not a topic last year, so CSR is giving us the impact this year. corporate social responsibility. And we did have a certain amount of tailwinds last year because some of the assets which we had impaired, we found alternate uses to them, and we wrote them back into the books, and they are working right now. But that particular tailwind is not available today. And we are benefited by the MEIS last year, and you know that MEIS has been replaced with ROTEP, and ROTEP is not available for special economic zones. So some of these are the elements which actually caused increase in the other expenses. And a couple of other topics were that there are some expenses which we are incurring to manage the business for export of services, and you would also see that it is compensated by the significant increase in the export of services revenue. Other income also you see there is an increase. So that's the total story for the major elements within the other expenses.
Mr. Shastri, how much would be the forex loss? Could you quantify that for us this quarter?
We have incurred a loss of close to 4.5 crores.
4.5 crores. Okay, got it. And sir, would you do you still maintain our long-term aspiration of significantly improving our profitability? This company has had a history of operating at nearly 16% margins in the past, where the volumes were good. Of course, the business momentum was pretty good in FY18-19. But given the fact that once the momentum for MNHCV OEM volumes returns, export volumes get better, do you expect to get to that 15% margins going forward in the next a couple of years at least?
Yeah, the 16% versus now there are certain tailwinds that were available no longer available. We used to get about 2% improvement on the export incentives, which is not there. Plus probably some CSR. These are the two things I would say is the certain tailwinds available not there now. But we are there are a few things I would like to highlight. One is the industry volume itself still is much lower than what we have invested in terms of capacity, because it used to be per quarter. Per quarter we used to do for a peak of almost 120,000 vehicles. If you see in this quarter, because I always compare the air brake vehicles. In this quarter under review, it was 66,000 vehicles. So still, but then the positive news is that we are seeing improvement, and we believe the market will continue to grow. Still not clear when it reaches the peak, but at least next 2-3 years there will be a growth in the vehicle numbers with the economic growth that is being predicted. And that is one. So it will definitely improve our margin because you're comparing the earlier one. The second is we have been doing a very strong focus on our aftermarket, and even in the OE now we are also we are building a new business on the digital side, which we did certain work earlier, but now we reached some level, and we will see that also moving into positive zone in terms of profitability. We have we started getting some subscription revenues, close to 50,000 trucks in our account. This is from the OE route. Plus, we are also now working in the aftermarket to put some of the digital solutions. So we are more and more trying to get the vehicles connected to us, subscription revenue, the initial investment that we made, all those things will be paid back. So this will also drive the growth at the bottom line. And the aftermarket as a business itself, as a percentage of sales, percentage of overall sales, we are trying to drive better. As I said, very fundamental improvement we have done in terms of launching 13 new distributors with 109 new branches, increasing the reach in the market, applying some of the analytics tools and techniques to see each product, how much we are selling, how much we should sell, what is our entitlement, etc. So we are driving that growth. With all that not so good economic situation, we are growing in the aftermarket about 20% in the quarter. This will drive our aftermarket significantly, meaning our bottom line significantly, because it's a very profitable business. And then, of course, we are fundamentally looking at one side we are working with OEMs to get the compensation. At the same time, we are also looking at internally how to manage to offset the inflation to the extent that what our customer is not compensating, we are trying to do it through many other initiatives. We have been a company pioneering in the lean and TPM type of techniques applied in the supply chain. We are, driving that. Plus, also few of the products where we are not that profitable, we are redesigning to the cost. To make sure that with the design capability that we have, we are redesigning some of that. So all that we are trying to do to make sure that we are back to our profitability levels. If not 16%, but as I said, there are certain tailwinds which we had earlier. It is not that much available right now, but we are driving the basic profitability, moving forward. Yeah.
Sir, last question was just one last question on the content per vehicle. You have highlighted previously that our entity's content per vehicle versus our own sister concerns across US and Europe. If you look at the content per vehicle, it is still very, very low, somewhere near $600 per vehicle. And the Western geographies, I mean, your sister entities in US and Europe, the content per vehicle is as high as maybe $1,500 to $1,600. So are we still do we still maintain our positive view on the content per vehicle improving going forward? Where are we in terms of, if you can just give us some update on your new products and the launches, which are the new products that you are going to launch and what are we doing in order to increase our content per vehicle going forward? That was my last question, sir. Thank you so much.
Yeah. No, we still hold the same view because India follows the global trend. We are always some 2 years behind global trends. So there are a few products that will drive our growth. Of course, I've been highlighting AMT for quite some time, but now the time has come for AMTs to pick up, and we are already there in the 9-speed gearbox version. We are launching AMT with a few customers, and that will significantly drive our growth. If you see US and China, they were like the current situation as far as AMT adaptability is concerned. Few years ago, 4 or 5 years ago, but today in this market, this is one of the very fast growing technology. Similarly, this brake also we have localized now. A few of the customers, particularly in the electric vehicle, they have adopted. EC, this will drive our another important product that will drive our growth, very significant content. And similarly, the electronic stability control slowly started picking up even before regulations. Regulations will come in 2023. And in the near term, there are certain regulations like the pressure test connector has been mandated. So it's a small, maybe around 2,000 rupees delta, etc. But some of this will come immediately in the near term. And of course, now in the electrification, now the very rapidly getting adopted, at least in the bus segment. And we are present with our electric compressors. So again, very high content. So we will be driving our outperformance through these products and many new. I also talked about digital business is something that we have started. So it's all these things will drive our growth. We'll more and more move into the autonomous connected electric domain, and this portfolio of products that we are already having it. This will progressively take off.
Sure, sir. Thank you so much, sir, and all the very best. Thank you.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Jinal Seth from Avigra Capital. Please go ahead.
Good afternoon, Mr. Kaniyappan. Hope all well with you and the team. In the last few calls, you have been highlighting about the global business and exports in that sense that at some stage, that would come to WABCO India. If I were to look at the trend in the last few quarters, we've kind of, we are in that 220 crore run rate. I mean, when do you see that kind of, where the run rate kind of starts picking up? Is that would that be near term, or there's some time to go?
Yeah. If you see, we have been in the range of about 60 crore per month. If it is 19, 20, 2021, even previous year. Previous year, around 65, 67 crores. Today, we are in the range of about 75 crores. So that's growth in the last, despite all this COVID and all that. But the challenge we have is the export plant is full now. Mahendra City plant is full. Some of the growth will be very incremental right now, and we are going to, the Oragadam plant, the construction will be starting the end of March, and by end of this year, we will start the SOP. That's the way we are moving, and that will drive our next jump in the growth, and that also will be handling some of the new demand from our new parent. So it's the step increase is expected only when we have the new plant. Right now, the next 1 year, it is largely incremental.
Okay, thanks on that. And my second question is, do you expect any regulatory changes in the near term which can kind of help us?
So of course, we say in the top line, the regulatory changes are, in the very near term, from April, there is going to be a regulation which calls for some of our products to be fitted with pressure test connector. The connector that will help the fleet and the customers to check the pressure in the system. That many of our products have to be fitted with that pressure test connector. From April, I think it comes into force. So it's a small delta. Then the major thing is that electronic stability, which there is a mandate already available for the M3 buses from April 2023. We have already homologated the technology with most of the OEMs. Some of the OEMs already started selling even before the regulation, because this product, some customers, particularly those who are carrying the hazardous goods, they need it even now. So that already started. Few other customers, the next 1 year time frame, they will homologate and adapt. So we are getting ready for that regulation in April 2023. These are the two things I'm able to see.
Okay, and that.
Yeah, sorry.
No, I'm sorry. The pressure connector that you mentioned, what is that a small component of our sale?
Yeah, it is, the overall delta could be in the range of some 2,000 rupees. Because many of our products need to be fitted with that. I wouldn't say it's not a big change, but still that in terms of timeline, and export rate will come into force, and we are all getting ready for that.
Okay, thank you so much, and good luck.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you have a question, please press star then 1 on your touchtone telephone. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir, good evening, and thank you for the opportunity. So firstly is on this new subsidiary that we are setting up. Just wanted to understand, would we be separately catering to some specific products, some of these that you mentioned, or it would do the same products that we have been doing in the standalone business?
Because actually, right now in the domestic business in Chennai, we have our Ambattur plant is full now, so we need a space.
Yeah.
Also, we are also the Mahendra City plant for export also full. So the first focus is to support the increasing domestic demand and the export demand through that new subsidiary. And we are starting a new subsidiary because you get the tax benefit, the corporate tax.
Sure.
if we are able to invoice before March 2023, then we will be operating at 15% level.
Right.
Also, the new subsidiary can support any new, business that is needed to be localized in India for ZF as well. It will have, that advantage. Number one, plus the PLI opportunities of localizing some of the advanced technologies in India. We have listed quite a few in that application. So that also will be done through that subsidiary.
Right. And we'll also get the MEIS benefit in that from the exports that we do from there.
MEIS, Raja,
MEIS is
the rod tape I meant, not MEIS, the rod tape.
We are not designating that as a special economic zone. We are going to operate it as a customs bonded warehouse, so that will be eligible.
Right. Okay. And they wouldn't. Yeah.
Adding to what ND sir just said, it will be typically new investments, and it will be distinguished by having new business. We will not transfer business from existing entities into the new entities. It will be an expansion in terms of new products or new business, having new customers, and it will be supported by new investments in terms of plant and machinery.
Right. So that subsidiary will directly export or directly supply to the customers. It wouldn't be like a related party.
Yes, Mukesh.
Right. Understood. And just my second question is on these new products that we are looking at on the domestic side. Have we seen any competition that is also looking to kind of get this? Because obviously the market opportunity goes up significantly with these new products. So either Norbrense or Haldex or any of these other players, are we seeing OEMs also kind of looking to source these products from more suppliers? WABCO is very high, 90% market share in its current products.
Yeah, actually, in the OE space, it takes time for any competition to step in because it's a braking system, homologation, and so many things. It takes quite some time.
Right.
And the industry is actually quite competitive. We are so it's new players to take the competitive position. It could be a little challenge. But I see the challenge could be in the aftermarket. In the aftermarket, you don't have there's no big entry barrier, and also so there could be some players who can try and come into aftermarket. But of course, at the same time, the way we are evolving is moving into digital space now. Like in the aftermarket itself, we are trying to move to the high end also, while we are catering to the repair kits and other products. We're also moving into advanced telematics, etc., in the aftermarket to of course offset any possible impact. In the OE, Mukesh, this electric portfolio of ZF and of course earlier WABCO has good opportunity now as the bus segment is more and more adapting to electric vehicles, and we see good opportunity to really again grow. There the content could be much higher because those products are the value is much higher. Whether it's electric compressor or electronic braking system or disc brake, all those things are high content products, and the industry is adapting to those things. Where those, in my view, is actually it's a requirement there to efficiently use that energy. So we see, of course, a good traction in the going forward. I think it won't be overnight, but this year itself we see some good number of electric buses, and few of the customers we have already secured or in the final stage of securing that businesses. And of course, the digital side also, I think it will slowly rapidly move forward.
Right. So we can broadly expect that our market share remains at similar levels with those new products that we'll kind of enter into?
Yeah, by and large.
Right. Sure.
This is the near term.
Sure. Right. I think these are the two questions I had. I'll get back in the queue. So thank you.
Thank you.
Thank you. The next question is from the line of Chetan Ginodia from Accurate Advisors. Please go ahead.
For a great set of numbers. Sir, I have two questions. Firstly, on the gross margin side, we have seen quite a sharp dip in this quarter also and since last 4 quarters. So when do we see, passing off the entire pricing to the customer, and when can we get normalized gross margin levels?
Yeah. No, as I said, the last 4 quarters, the actual commodity increase started sometime last year. I would say from January onwards. Almost for all the 4 quarters we had to face this challenge. So that's one of the main reasons for the erosion of the gross margin. Now I see that it's moderating. Number one, it is not. The general expectation is at least 1 or 2 quarters. Still, some commodities may marginally increase, but it won't be at the steep level at which it was going. Number one. So that is one. Second is, in some of the 2 actions which we are taking for the domestic business perspective, that in the aftermarket, we are going to now launch the offset or pass on this increase soon in the market. At least to the extent that the commodity inflation has happened, which is an action plan. And OE, as I said, we are working with customers, so maybe within a quarter, we might be able to secure, at least 80% of the cost that is being, that we have incurred. Parallelly, we are also initiating many actions. Of course, we have been continuously doing to offset this, but now we are also accelerating some of those specific actions to really offset the inflation, offset that impact. So I'm not in a position to exactly tell when, but that's the direction we are moving. Probably, in my view, the worst is over.
Okay, sir. And secondly, you said our plant will not be eligible for MEIS scheme, and so 16% kind of margins that we did historically will not be very likely possible. So is it not possible for us to pass on the difference, the shortfall due to MEIS to our customers?
We can try. So again, because it's an incentive that was available here. Normally, these export business is based on certain contracts that we have with customers. But more actions, I would say, should be driven internally to see how we can offset it. I'm not sure whether it's a straightforward topic to just pass on, because the incentive we cannot get in it. On the other hand, Raja was saying that whatever we'll be producing from the new site, Oragadam, we'll get that incentive through the road-up route, because we are not positioning the site as a city site.
Okay. And sir, just a clarification: our Oragadam plant the construction of the same will start from March 22, right? And commercial production will start from what time period?
Our target is to do by December.
December 22.
Yeah, this year. Yeah.
Okay. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to the participants: if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Vasudev Banerjee from ICICI Securities. Please go ahead.
Yeah, thanks. Just wanted to understand, as you said, 66,000 units versus the highs of 1 lakh units. So will that be right to assume that broadly you are operating at 60-65% of utilization?
Yeah, even though the number is less, but the content is slightly different from those. So I would say we are in the range of about 75% utilization right now.
And including the Oragodam plant, which you said, so what's the capex outlook you have for fiscal 23 and 24?
Yeah, including the land, building, plant and machinery, everything, we are expecting to be that next 2 years we'll be spending about 150 crore.
Each?
Not each, combined.
And including maintenance and other capex, so 150 crore is only on this new plant, you mean?
Yeah.
Only for new plant. Yeah, only for Oragadam plant.
But overall?
Sorry?
Overall capex, how you are looking at?
Our general run rate is about 100 crores a year. That will continue. And what we are now saying is this 150 crores is exclusively for the land, building, and a bit of machinery in the new plant in the next 2 years.
And sir, your comments on how this, initially you also commented a bit, how do you see this semiconductor shortage resolving gradually both in India and in your target export markets? So your comments?
Yeah, maybe I'll give a little more detailed answer here. The domestic market, we are currently, only there are 2 products which we rely on that semiconductor. One is the ABS ECU. This ABS ECU, there are certain components for the ECU, it's critical, microcontroller, etc. But then we have protected all the customers in this year. 2021 we are fully protected. Next year also, right now, next few, at least in the near term, we are clear. We have protected the customer. We have visibility of the stock. And the other one is on the telematics ECU. We have certain challenges, but we are working with the supply chain to see how we can protect the customer. This is for India. We don't see a big challenge in impacting the top line. But exports is a different story because they export many of our plants, global plants. Their customer production is affected because of they are not able to produce the vehicle itself because of the semiconductor shortage. So that is still continuing. Even in this quarter, many parts of the world they have challenges. To that extent, the impact on our export is it will be there. But at least what I see is maybe we are not able to grow significantly because of that challenge. But otherwise, we are more or less protecting the similar levels. The similar marginal growth still will be there. We have some good backorder spending. Few products that we are exporting from Mahindra City, it has to be fitted with a certain electronic control unit, which has to be supplied by our parent organization. There we have some challenges. But as I said, in the domestic business, from our side, we may still protect our customer lines. But customers themselves, if they are not able to, produce vehicles because of shortage of semiconductor, because semiconductor shortage is expected to be there for at least another 2-3 quarters. It's not going to be. It's not yet over. It is not going to be over at least next 1 quarter. But there is a general indication that it may be there. The challenge may be there for at least the whole of 2022, or at least the next 2-3 quarters. So that still uncertainty in the top line. Export, while we have certain challenges, but at least while the growth could be noted, but the basic levels could be at the current level. Just to give you a broad idea, but this is a very lot of uncertainty in this particular aspect. But based on the current, my understanding, and I would like to give that information to you.
Sir, I hope you mentioned in the earlier part of the call that you have taken almost 70% of the cost escalation for OEMs and around 45% for replacement. Am I right, sir?
That's correct.
So,
for the aftermarket.
Aftermarket. So what is the timeline you are looking for each of the segment next leg of hike?
Maybe see the aftermarket. If we have to make our plan is to make that effort impact. But the point is, normally that gets accrued over a period of 1 year or so. It's not when we increase it, we pass on the increase in a manner that in the case of aftermarket, at least now what we are planning is last year. March and July we increased. So this year when we increase, but before at least July, we would like to cover that 1 year accrual within a year that we completely pass on. That's the way we are planning. On the aftermarket OE side, it's a matter of I would say another quarter or so. We should be at least at level of 80% plus. I'm not sure whether we will be able to get the full compensation because it's still a negotiation. So, but we will go to 80% plus.
And are you witnessing any element of raw mat basket reversal altogether?
Sorry?
Are you witnessing any signs of raw mat basket costing reversing downwards?
See, there are indications that number one, it's moderating. If you see the aluminium is it's very steep increase in October to December quarter, then that is slowly somewhat moderating. Steel is the rate of increase is coming down, but increase is still there. So the general expectation is that it may stay at that level. It may not come down. If at all it comes down, maybe we have probably after April we have to watch. But right now, not in a position to really give any specific indication. But what we are able to see is that rate of increase has been moderating.
Understood. Thanks.
Yeah.
Thank you. The next question is from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, sir. Just one clarification. Any idea as to the new plant that you are putting up? The assumption is correct, right? That is the one which we are applying for, which will be going into for the PLI as well in Oragadam.
We have included both the holding company, that is WABCO India, and also the subsidiary in our PLI application.
Right, but just the PLI entails fresh investment into capex. So can we assume that there is another round of capex coming up in the parent entity WABCO India as well?
The investment should be that the threshold investment is 250 crores as a minimum on the products which are listed within the AAT listing. So we will have to invest for those products a total of 250 as a threshold. And then we also should be having a 10% growth year on year over the base year. So these are the requirements, and that definitely we are planning.
Right. So 250 crore of investment. Okay. Right. Sir, could you just help us with one data point? If you can just highlight for FY21, how much was our intake in MEIS, and going forward that our new Oragadam plant is not going to be eligible for rod tape or MEIS. What could be the total loss, and thus the loss in margin?
We used to get about 2% of our export sales as MEIS, and that today is not there from the special economic zone. So even if you take a 700 crore export, 750 crore export, we are talking about close to 15 crores we missed over the entire year.
Right. So that won't be there at all now for any of your plants, or will it be there for the new plant and the old plant? I'm just sort of confused.
Oragadam will be eligible because will be eligible for rod tape. Rod tape is at a much lower rate compared to the 2% of MEIS. Rod tape is about 0.9% for our chapter, but at least that will be eligible from Oragadam for whatever we export out of the plant.
Got it. Oh, fair enough, sir. Thank you so much.
Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
No, I would like to thank everyone. It was quite good opportunity for us also to share the details as required, as expected by the in this call. So thank you very much.
Thank you very much. On behalf of Batlivala and Karani Securities, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.